Welcome back. Well, for the markets, we're just about holding those levels with the Bank Nifty down around close to 200 odd points. 38,853 is where the Bank Nifty is at. So below that key level of around 39,000, we have hit those marks on an intraday basis, but we keep drifting lower below that, below 17,000 for the Nifty and 39,000 for the Bank Nifty. Let's see, we'll also keep track in terms of how the European markets are going to trade, because that will be an important cue for us. But let's go across to Manisha Gupta. She has a guest with us on our commodities segment.
Thank you so much for that. Well, I have Sushant Gupta, who's Director of Wood Mackenzie, joining us now to talk about all that's happening in case of the crude oil prices. Sushant, thank you so much for joining in. 3 days and 11% shaved off. How are you looking at the prices currently?
Well, thanks, Manisha, for having us. Right, if you look at the market, right, which is surrounded by so many uncertainties, right? So we always said the prices will be volatile. So, so we shouldn't be surprised by that. So we have seen the ups, we have seen the downs. And this time around, particularly, the financial market turmoil, is driving fears of recession, a lower global economic growth, and also, leading to a fear of a lower oil demand growth. Right. So, but overall, we shouldn't also forget the other important factor, which is that the fear of large loss of supply from Russia, which market was expecting all along, on the crude and the product side, has been minimized. So that fear has gone away on the supply side, and which was supporting the prices. So I think, so fundamentally that has changed as well. Now, all this financial market turmoil, will have a larger impact on the OECD economies. But we think the downside is limited because, in our view, for this year, OECD economies were accounting for only about 15% of the global oil demand growth of 2.6 million barrels per day. So all hopes are now on the emerging economies to support the prices.
All right. And when you say that, what kind of a demand are you looking from Asia then, especially India?
Well, I think, so Asia, obviously China will be, a shining star for this year. Accounting for almost 40% of the global oil demand growth, a million barrels per day coming out of China this year. Well, I think a huge pent-up demand is there to be discovered in China. A large growth will come from transport sector, petrochemical sector. Now for India, again, we think it will be a bright spot in the global economy for 2023 with a GDP growth of 6.5%, which we forecast. We expect India's oil demand to grow by around 200,000 barrels per day, taking oil demand to around 5.4 million barrels per day for this year. So apart from China, India, Southeast Asia is another, third bucket where we would see a robust demand growth. So Asia will be a key, player in supporting the prices for this year.
So, Shant, I do remember that you're not a big fan when it comes to predicting crude oil prices, but we do understand that while the first quarter of this year has been quite volatile, the banks and brokerages still believe that the second quarter could be looking at 90, 95. We've heard $100 as well. Are you looking at that kind of a demand growth and optimism by second half?
Well, I think from a fundamentals perspective, yes, we always had quarter one, to be the weakest in terms of oil prices. Now, and the main reason was the quarter two demand growth. When we expect China's rebound to be much stronger in quarter two, we expect the prices to be supported much stronger in quarter two. So we are saying the prices will appreciate meaningfully towards $87, $88 per barrel for quarter two, driven by the global oil demand growth of 2.9 million barrels per day for quarter two. Now, for the full year 2023, if you look at the full picture, the liquid supply grows by 2 million barrels per day, but the demand growth is 2.6. So there is a bit of a tightness in the market from a supply-demand perspective, and we expect most of the tightness will appear in the second half of this year, where the oil prices could reach around $90 per barrel average for the second half of 2023.
I have one more question, Sushant, and macros are equally important. You have an ECB meeting coming in today, 22nd March is US Fed, and as you mentioned, the Russia-Ukraine issue is far from over too. What would you want to watch out for when we move ahead from here?
Well, I think in terms of uncertainties, obviously, the biggest thing to watch would be around Russia sanctions, the impact of that, particularly on the product side, and how Russia is able or not able to find alternative markets for its products, particularly diesel. right? Second is obviously China's economic growth, right? We are putting a huge hope for China's demand to grow for this year by around 1 million barrels per day. Now, if that doesn't, happen, then obviously it's a big uncertainty for the oils market. Third one, as I said, I put that as a third because the OECD economy growth, because we're already forecasting a slow growth for OECD economies. So the expectation of the U.S. interest rate hikes, which could potentially slow down sooner than expected, given the financial market turmoil.
Okay.
Okay, all right, Manisha, as well as Sushant, thank you very much for taking us through that conversation. On that note, it's also a wrap on Halftime Report. Stay tuned. Business Lunch up next.